Tesla 3-for-1 stock split and stakeholders can vote for it now. Tesla, TSLA, has said that it is going to put a 3-for-1 stock split to a shareholder vote at its upcoming annual meeting. The company announced its intentions to do another stock split back in March, but it didn't reveal the details. Today, as part of the release of its prospectus for its 2022 annual shareholder meeting, Tesla announced that it is going with a 3-for-1 stock split, meaning that if you own one Tesla share, you will get two more. The automaker is asking shareholders to approve increasing its common stock to 6 billion shares in order to enable the stock split. Watch the video till the end as we tell you all the details about Tesla 3-for-1 stock split, and stakeholders can vote for it now. Tesla Incorporated said it will ask shareholders to approve a 3-for-1 stock split at its August annual meeting, according to a proxy statement filed Friday after the market close. The stock jumped 1.9% in post-market trading on the news. The proposed split in the form of a dividend comes amid a sharp sell-off in Tesla, which saw its shares underperform broad markets. The stock is down nearly 35% this year, compared with an 18% drop for the S&P 500. The company also said Larry Ellison will step down from the board. Ellison, the 11th richest person in the world worth about $87 billion, originally made his fortune as the co-founder of the software company Oracle Corp. and first joined Tesla's board in December 2018. As of June 30, Ellison held a 1.5% stake in the EV maker, according to Bloomberg data. Elon Musk's EV company first announced its plan for a stock split on March 28 via a tweet that lacked further details. The shareholder meeting will be held on August 4, both virtually and in Austin, Texas, where the company is based. If approved, this will be Tesla's second split in less than 2 years. The company executed a 5-for-1 stock split in 2020, leading to a 60% surge in the share price from the day of the announcement to the execution date. The EV maker is clearly hoping that will happen again, as having the shares trade at a lower price could entice its strong fan base among individual investors. Still, anyone betting on a repeat of 2020's success might want to temper those expectations, as the market environment may not be as welcoming for this strategy as it once was. Alphabet Incorporated and Amazon.com Inc. unveiled 24-for-1 stock splits in February and March, respectively, and both shares are down about 20% since the announcements, while underperforming the S&P 500. And the steady erosion of Tesla's stock over the past few months suggests its big and loyal following among retail traders may not be able to counteract the overall souring in investor sentiment on the company, especially with risk appetite generally low. The company also recently lost its top spot at the flagship fund of one of its most ardent backers, Cathie Wood, as it was replaced by Zoom Video Communications Inc. Shareholder proposals. Meanwhile, proposals by Tesla shareholders include corporate governance-related items such as the right of employees to form a union and Tesla's efforts to prevent sexual harassment and racial discrimination. In 2021, the National Labor Relations Board upheld a 2019 ruling that Tesla illegally fired a worker involved in union organizing, and that the CEO had illegally threatened workers regarding unionization, according to a stockholder proposal cited in Tesla's filing. In March, Musk invited the UAW to hold a vote at Tesla's California factory. But Tesla does not have any formal policy commitments to respect the right to freedom of association, nor has it demonstrated how it would effectively operationalize such a commitment, the proposal said. Tesla's board advised a vote against the proposal, saying Tesla recently increased the base pay for its manufacturing jobs and it is actively engaged in protecting employees' rights. Shareholders also proposed an annual report on Tesla's efforts to prevent sexual harassment and racial discrimination after it was hit by a string of lawsuits. A California civil rights agency filed a lawsuit accusing Tesla of failing for years to address widespread racist conduct at its Fremont assembly plant. Tesla has opposed the suit and filed a counterclaim that contends the agency never properly investigated the allegations. Tesla said it does not tolerate discrimination, harassment, retaliation, or any mistreatment of employees in the workplace. Another resolution asked Tesla to evaluate the impact of Tesla's current use of arbitration on the prevalence of harassment and discrimination in its workplace. Shareholders also called on the company to report its policies to address perceived lack of gender and racial diversity at its board. The proposed 3-for-1 stock split means that shareholders who own one Tesla share will get two more, with all three shares valued the same as the initial share. The main objective with the stock split is to lower the price per share, making the common stock more accessible to retail shareholders while also giving Tesla employees more flexibility in managing their equity. Tesla, unlike other manufacturers, offers every employee the option of receiving equity, but the company notes that since the previous stock split in August 2020, its stock price has risen 43.5% as of June 6, 2022. While this value appreciation has led to our employees benefiting enormously through the years, we want to make sure all employees, no matter when they join, have access to the same advantages. We believe the stock split would help reset the market price of our common stock so that our employees will have more flexibility in managing their equity, all of which, in our view, may help maximize stockholder value. The primary purpose of the authorized shares amendment is to facilitate a 3-for-1 split of our common stock in the form of a stock dividend, the stock split. As of June 6, 2022, we have 1,036,390,569 shares of common stock outstanding. And the current number of authorized shares of our common stock is 2 billion, which is insufficient to effectuate the stock split. Our board intends to approve the stock split, subject to and contingent upon stockholder approval of the authorized shares amendment. That is it from today's video. If you found this video helpful, then make sure to hit the like button and make sure to subscribe to our channel so that you don't miss out on any of the amazing and informative videos we have in store for you.